Here are a few changes to look for on your 2020 Form 1040. The question regarding virtual currency has been moved from Schedule 1 to the top of page 1 of Form 1040. Also on page 1 is the new above-the-line deduction for up to $300 of charitable cash contributions. On page 2, you will see a line for the recovery rebate credit. Remember, the stimulus checks issued this year were in advance towards this credit. If you have any questions on the changes to the 2020 Form 1040, please contact your Untracked Early advisor. One thing you might be looking to do this tax season is to ensure your taxes are not fraudulently filed. The Identity Protection PIN is a 6-digit number assigned to taxpayers to be entered on their federal tax return. It helps prevent identity thieves from filing fraudulent tax returns with stolen Social Security numbers. Historically, the IRS has only issued IP PINs to victims of identity theft. Starting in January 2021, all taxpayers can request a PIN online at www.irs.gov/IPPIN.
If you've incurred and paid medical and dental expenses for yourself, your spouse, or your dependents, and you're itemizing your deductions, you're eligible to take a deduction for tax year 2020 if the total of the expenses exceeds 7.5% of your adjusted gross income. Medical expenses generally include payments for diagnosis, treatment, and prevention of disease. Some examples of deductible medical expenses may include, but aren't limited to, payments of fees to doctors, surgeons, and dentists, payments for drugs that require prescription for use by the individual, payments for prescription glasses, contact lenses, and hearing aids, and payments for insurance premiums you paid that cover medical care or long-term care insurance. It's important to remember, if you're an employee, the medical expense portion paid by your employer is not eligible as a deduction on your personal tax return. Also, keep in mind, you may only include the medical expenses you paid during the year, and you must reduce your total deductible medical expenses by any reimbursement you've received or any reimbursement paid directly to your medical provider. We strongly advise that you retain all payment receipts, which help in determining if the medical expenses paid or incurred are deductible.
Did you know that there is a special gift tax rule that allows individuals to make a tax-free lump sum contribution to a 529 plan of up to $75,000 individually and $150,000 jointly without any gift tax implications? The only caveat is that you are unable to make tax-free gifts on behalf of the same beneficiary within the next 5 years. This is a great way to meet future generations' college financial needs while pushing money out of your estate more quickly and still being able to maintain control of the investment strategies. Of course, your estate would have to include a portion of any contribution made within the 5-year averaging election if you do not live past the 4th year.
It is important to remember that contributions to your traditional IRA account might qualify for a tax deduction up to the annual contribution limit. For 2020, you can contribute up to $6,000 if you are younger than age 50 or $7,000 if you're age 50 or older. Please keep in mind that contributions to your IRA must be made by the tax filing deadline of April 15, 2021. If you would like to know about the tax deductibility of your IRA contributions, please contact your Amtrak team for additional guidance.
When gathering your tax information, it is important to take some time to reflect on the previous year and inform your Untracked advisor of those financial transactions that transpired that are not necessarily reported on an official tax form, such as the birth of a child, a new investment, a gift, or a loan to a friend or a family member. This information is extremely important as it can lead to tax savings or potential required tax filings.
Beneficiary designations on retirement accounts and life insurance policies are often overlooked when there has been a life change. It's a good idea to take a look at your IRAs, 401ks, and life insurance policies periodically, especially if you have experienced a major change in your life due to marriage, divorce, the birth or adoption of a child, or death of a spouse. You'll want to remember to consider whether any changes need to be made to your beneficiary designations when the life-changing event occurs. It's also a good time to review your will, as these events, as well as changes to federal and state estate tax laws, could have an impact on your will too.